let's dive right in. Have you ever entered a trade relying purely on gut feeling instead of hard data? Well, today's explainer is definitely for you. We're going to take a massive step forward in your trading journey today. We're talking about turning that guesswork into pure mathematical precision, all by mastering the risk/reward ratio tool. Here is our quick roadmap for today. We'll be covering 1. Finding the trading tool. 2. Mapping a long position. 3. Calculating risk and reward. 4. Planning a short position. And 5. The final crucial step. All right, section 1. Finding the trading tool. You know, it's actually kind of funny how charting software sometimes practically hides its absolute best calculators right in plain sight. So if your sidebar isn't showing up right off the bat, here's exactly what you need to do to uncover it. First off, just click that small blue icon to show drawing toolbar. Next, count down to the 5th option. And finally, click the little arrow right next to it, and boom, there they are, the long and short position tools. Now, before you start clicking away, you really got to keep your setup in mind, right? You're going to grab the long position tool to map out your bullish trades, basically when you're buying, and then you'll flip over to the short position tool when you're looking to capitalize on a downtrend by selling.
Moving on to section 2, mapping a long position.
What is absolutely fantastic about this tool is how it visually maps out your entire strategy right there on the screen. It uses a super intuitive color coding system. The red zone? Well, that's your danger area. That represents your strict stop loss. And right above it, you've got the green zone, which is your target, your ultimate reward area.
So to put this into practice, you absolutely don't need some complex spreadsheet. Not at all. You literally just click to anchor the tool exactly at your intended entry point. For our example here, we're going to snap our entry perfectly onto the middle line at a price of $17.20. Easy as that.
Which brings us to section 3, calculating risk and reward. Okay, now for the exciting part, actually building the mathematical foundation of your trade. By dragging that red line down to set a stop loss at 1700 and then stretching the green line up to a target of 1780, the real-world impact becomes crystal clear. Let's say you have a 100-share quantity. That's strict 20-point risk. It's capped at a $2,000 loss. But on the flip side, hitting your 60-point reward yields a sweet $6,000 profit. Literally everything is laid out right in front of you before you risk a single dime. And look right in the center of the tool. It automatically generates this sort of magic number, 3. What does that actually mean? Well, it means your risk/reward ratio is a perfect 1 to 3. Basically, you're setting yourself up to make 3 times the profit for every single unit of risk you take on. And honestly, guys, that is the absolute cornerstone of long-term profitability. Oh, and here's a really quick pro tip for you. If you're someone who always trades a fixed quantity of shares or maybe a fixed cash amount, you can actually just enter those right into the tool's settings. Once you do that, it auto-calculates the whole shebang instantly for you every single time you pull it up on a chart. It saves you so many precious seconds when you're in the heat of a trade.
All right, section 4, planning a short position.
But hey, what happens when the market is falling and you want to sell? Well, the tool completely inverts when you select a short position. Think about it. For a long position, your red stop loss zone is safely below your entry price, right? But when you're shorting, that red danger zone automatically flips to be above your entry price. That's because you need protection just in case the asset unexpectedly rallies upwards. So looking at our short selling setup here, setting a stop loss slightly up at $17.97 and stretching that green target down to 1700 creates this beautifully clear visual of the math. We're looking at a potential 69-point profit stacked up against just a 27-point risk. And once again, the automated math just takes over. The tool immediately displays a highly calculated 2.54 risk/reward ratio for this bearish trade. It literally takes all the mental gymnastics totally out of the equation, so you can just focus on execution. Finally, we arrive at section 5, the final crucial step. Okay, so we've perfectly planned out both a buying and a selling scenario, but listen up, because there is one absolute reality check you must understand before we wrap up. Please do not make the insanely costly mistake of assuming the tool actually executed your trade just because it looks all pretty on your screen. It is strictly a calculator. You still have to manually go over to your broker's order window and physically place your entry, stop loss, and target orders into your system. Don't forget that. So now that you know exactly how to reveal, configure, and read the risk/reward tool,
I want to leave you with this one final thought for your very next session on the charts. Take a good hard look at your process. Is your next trade actually mathematically sound, or are you just guessing? Thanks for hanging out with me for this explainer, and happy charting.